Imagine waking up to the news that billions of dollars worth of goods from the European Union and Canada will now cost significantly more due to new tariffs imposed by President Trump.
Well, I heard his speech, and you're talking about JD's speech, right?
Yes, sir.
I heard his speech, and he talked about freedom of speech, and I think it's true in Europe. They're losing their...
Just before midnight in Paris, returning to his hotel, the Prime Minister facing a new round of questions about Donald Trump's latest threats.
Businesses, investors, and world leaders are scrambling to assess the consequences. Is this a strategic power move to boost American industries, or are we witnessing the beginning of a global economic storm? Before we dive into the details of this major announcement, make sure to subscribe to our channel and turn on notifications. We bring you the latest updates on international politics, economic developments, and global trade. Don't miss out on crucial insights that can impact your business and financial future. In a move that has sent shockwaves across the globe, President Trump has announced sweeping tariffs worth $262 billion, primarily targeting the European Union and Canada. Breaking it down, $149 billion worth of tariffs on the European Union, $13 billion targeting Canada. This aggressive trade maneuver is part of Trump's long-standing promise to put America first.
America's comeback starts right now.
Ensuring that U.S. manufacturers and workers receive fair treatment in international trade agreements. According to Trump, these tariffs are necessary to curb what he calls unfair competition from international markets that have, for years, undercut American industries. But at what cost? This decision has already ignited intense debates about how it will impact trade relations, global markets, and the everyday lives of consumers. Unsurprisingly, the European Union did not take this decision lightly. The European Commission issued a strong response, calling these tariffs a direct attack on international trade rules. In response, the EU is reportedly considering retaliatory tariffs on American goods, targeting industries that could cause political and economic pain in the United States. Possible areas of retaliation include whiskey exports, a market heavily reliant on European consumers, motorcycle brands like Harley-Davidson, which could see steep declines in demand overseas, and agricultural products, a major export that could face European import restrictions. The message from the EU is clear. If the United States wants a trade war, they are ready to fight back. Unlike the EU's immediate retaliatory stance, Canada has taken a more measured approach to Trump's announcement. While Canadian leaders have condemned the tariffs as unnecessary and harmful, their response suggests a desire for negotiation rather than escalation. Canada has stressed the importance of maintaining strong cross-border trade, especially given that the United States is its largest trading partner. However, history has shown that economic tensions between the United States and Canada can escalate quickly, leading to potential supply chain disruptions and rising prices for consumers on both sides of the border. This tariff decision is not just about international trade, it is deeply rooted in American domestic politics. Key reasons behind Trump's move. Number 1, a nationalist economic strategy, reinforcing his message of economic patriotism by prioritizing U.S. industries over international partnerships. Number 2, winning over the Midwest and blue-collar voters. These tariffs could be particularly appealing to factory workers, farmers, and industrial laborers who have struggled with outsourcing and job losses. And number 3, responding to industry lobbying. Several U.S. industries have long pushed for protectionist policies, arguing that international competitors are given unfair advantages. However, some economists warn that protectionism can backfire, leading to higher costs for U.S. consumers and potential job losses in industries that rely on international trade. The world has seen trade wars before, and history suggests that escalating tariffs rarely lead to long-term economic stability. Instead, they often result in higher costs for businesses and consumers. Tariffs typically lead to price increases, meaning everyday products could become more expensive for American and international buyers. Supply chain disruptions. Many industries rely on global supply chains that could face slowdowns, shortages, and higher costs. Market instability. Stock markets react strongly to trade tensions, and this latest tariff announcement could lead to increased market volatility, a domino effect of protectionist policies. If other countries follow suit and impose their own tariffs, global trade could slow down significantly. Some experts argue that this trade move could be a high-risk gamble for Trump, with potential long-term damage to American businesses, even as it aims to provide short-term political gains. With this massive $262 billion tariff decision now in effect, all eyes are on how the EU, Canada, and other global powers will respond. Will they negotiate, retaliate, or seek alternative trade alliances that could sideline the US in the future? Here are some key developments to watch. Will the EU officially implement retaliatory tariffs? If so, which industries will be targeted first? Will Canada maintain a diplomatic stance, or will pressure from businesses and citizens push them toward a stronger retaliation? How will the American economy react? Will this move ultimately benefit or harm American consumers and businesses? How will other global powers like China react? Will this inspire new trade agreements that shift economic power away from the US? Only time will tell whether Trump's tariff decision will be remembered as a masterstroke of economic policy or a costly miscalculation. As the dust begins to settle following Trump's historic $262 billion tariff decision, financial analysts, business leaders, and policymakers are now grappling with the widespread economic consequences. While the immediate reactions from the European Union and Canada were swift and defensive, the long-term effects are beginning to materialize in global markets, industries, and investment trends. This chapter explores how different sectors are responding, the potential winners and losers, and how emerging economies might take advantage of the shifting global trade landscape. One of the most noticeable short-term effects of these tariffs has been increased volatility in the global stock markets. Investors hate uncertainty, and with retaliatory measures looming from the EU and Canada, Wall Street and European markets have seen sharp fluctuations. The Dow Jones Industrial Average initially dropped 600 points after the announcement, as investors worried about potential corporate earnings hits. The S&P 500's industrial and technology sectors took the biggest losses, with major U.S. manufacturers like Boeing, Ford, and General Electric experiencing stock declines. In Europe, the DAX and FTSE 100 also saw significant drops, particularly among companies reliant on U.S. exports, such as automobile manufacturers and luxury goods producers. Despite these downturns, some sectors saw gains. Defense stocks and domestic steel producers surged as Trump's America First rhetoric and tariffs on foreign steel boosted investor confidence in those industries. Industries that rely heavily on international trade have been forced to adjust their strategies in response to rising costs and potential supply chain disruptions. Automobile industry facing higher production costs. The automotive sector, which heavily depends on cross-border manufacturing and component imports, is particularly vulnerable to these tariffs. Many American car manufacturers source parts from Europe and Canada, meaning higher costs for materials will likely be passed down to consumers in the form of increased vehicle prices. Ford and General Motors have already warned that tariffs will increase production costs, potentially leading to job cuts. European automakers like BMW and Volkswagen, who export vehicles to the United States, could face a decline in demand as American buyers shy away from pricier imports. Canada, home to major automotive assembly plants for brands like Toyota and Honda, may see a downturn in manufacturing jobs if production shifts elsewhere to avoid tariffs. Agriculture farmers brace for retaliation. The agricultural sector is another major casualty of Trump's trade war, with farmers particularly concerned about retaliatory tariffs from Canada and the European Union. Historically, agricultural goods have been prime targets for trade disputes, as they are politically sensitive and easy for countries to impose counter-tariffs on. Soybean farmers are already feeling the heat, as European buyers look to source their imports from South America instead. Dairy farmers in the United States fear new barriers to entry into the Canadian market, which has strict supply management policies. American pork and beef producers are lobbying for exemptions, as export tariffs could make their products significantly less competitive abroad. Soybean farmers are already feeling the heat, as European buyers look to source their imports from South America instead. Dairy farmers in the United States fear new barriers to entry into the Canadian market, which has strict supply management policies. American pork and beef producers are lobbying for exemptions, as export tariffs could make their products significantly less competitive abroad. The tech industry, one of the largest beneficiaries of globalization, is also facing uncertainty. Many consumer electronics, including smartphones and laptops, are assembled with components from multiple countries, and tariffs could complicate global supply chains. Apple, which relies heavily on components from Europe, could see increased costs that may lead to higher product prices. Semiconductor manufacturers, who depend on rare materials sourced from the European Union, may experience supply chain disruptions. Canadian tech startups, which rely on United States investors and partnerships, are concerned that trade tensions could affect cross-border investment. Emerging markets a window of opportunity? While traditional economic powerhouses like the United States, Canada, and the European Union grapple with escalating trade tensions, emerging economies see this as a strategic opening to fill the gaps left behind. Countries like China, India, and Brazil may take advantage of weakened US-EU trade relations to position themselves as more reliable economic partners. China could strengthen its ties with Europe, increasing exports of industrial goods and consumer electronics. India may benefit in the agricultural sector, as European buyers shift away from US soybean and dairy imports. South American countries like Brazil and Argentina might see an increase in agricultural trade, particularly with the EU seeking alternative suppliers. Additionally, African nations may also gain leverage in trade negotiations with Western countries, as the EU and Canada diversify their economic relationships to mitigate losses from US tariffs. The role of the World Trade Organization, or WTO. The WTO has been a central player in international trade disputes for decades, but its ability to mediate the escalating tensions caused by Trump's tariffs is being called into question. With multiple countries threatening retaliatory tariffs, the WTO may need to step in to prevent an all-out trade war. However, Trump's administration has historically been critical of the WTO, often arguing that it favors foreign economies over American interests. This has led to speculation that the United States may further distance itself from WTO regulations, potentially paving the way for more unilateral trade decisions that could exacerbate economic uncertainty. If the WTO intervenes effectively, it could facilitate negotiations that lead to revised trade agreements and tariff rollbacks. But if global powers refuse to compromise, the organization's credibility could be severely weakened, making it harder to resolve future trade conflicts. Looking ahead, what's the endgame? With businesses and global economies adjusting to new tariff realities, the key question remains: what is Trump's ultimate goal? Is this a short-term pressure tactic to force more favorable trade agreements, or is it part of a broader protectionist strategy aimed at reducing American dependence on foreign goods? Some political analysts believe Trump is leveraging tariffs as a negotiation tool, using the initial economic disruptions as a way to bring foreign leaders to the bargaining table. Others fear that this is the beginning of a prolonged economic standoff that could take years to resolve. Regardless of the outcome, one thing is clear: global trade will never be the same again. As businesses, investors, and world leaders navigate this shifting landscape, the decisions made in the coming months could shape the economic future for decades. Stay informed? Subscribe now! The global economy is shifting, and decisions like these can impact everything from the cost of groceries to international relations. To stay updated with breaking news, expert analysis, and in-depth reports, make sure to subscribe to our channel. Turn on notifications so you never miss an update like this video. If you found this analysis helpful, share your thoughts in the comments below. Do you think Trump's tariffs will help or hurt the US economy? Thank you for watching. Stay tuned for more updates on this developing story.